Welcome to the DIY Wealth Canada podcast, a show by independent investors for independent investors. Join hosts Bob and Nelson as they discuss investing, personal finance, and much more, all from a fiercely self-reliant Canadian perspective. As a reminder, nothing you're about to hear is investment advice. Thanks for listening and enjoy the show. Welcome, everybody, to the inaugural edition of the DIY Wealth Canada podcast. I'm Nelson. I'm one of your co-hosts along with Bob, and we're going to talk to you guys about basically anything that would be interesting to DIY investors who are looking to build their own wealth, their own portfolios, who just want to go at it themselves and who might just not only need a little help, but just want someone to sort of talk to and hear discuss what they've gone through. So we're going to start with kind of an introduction here to Bob, and then we'll maybe talk a little bit about me. So Bob, first of all, for the people who aren't familiar with you, where do you write? What's your blog? Maybe give a little bit of background of, where people can find you or maybe where they've seen you before.
Sure. Thanks, Nelson. So I am the brain behind Tawcan.com. So that's spelled TAWCAN.com. It's a word I made up, which stands for Taiwanese Canadian. We started really focusing on dividend investing or dividend growth investing around 2011. But before that, I was doing a lot of DIY investing, but quite honestly, I didn't really know what I was doing. Before 2011, I dabbled a bit on, some like day trading and, cheap stocks trading, or even just silly investment strategies in general. And I also rely a lot on high MER mutual funds. But we started reading some books around 2011, and my wife and I got really interested in building a dividend portfolio or investment portfolio. And the goal is to eventually live off dividends in the near future, right? And then over time, we got into the investment side of things and learned more about index ETF. And we started investing in index ETF as well. And that's mostly to improve diversification of our investment portfolio, right? So dividend stocks are great, but sometimes you're limited to certain sectors or, geographic. So by investing in index ETFs, that allows us to be a little bit more diversified, both asset-wise and country-wise. Nelson, what about you?
So that's like I was going to say, that's like a hybrid approach where you're looking for a little bit of dividends. Well, actually, a lot of dividends. I mean, we can talk about maybe a little more about your portfolio composition in a minute, but, a little bit of dividends and a little bit of indexing. And so why have both? What was the thought process there besides just the diversification? Was there anything more than that you were thinking about?
Yeah, so when I started buying stocks just shortly after I graduated from university, right, around 2006 timeframe. And back then I didn't really know what I was doing, right? So the first dividend stock, and I shared this on my blog, I purchased was a stock called ING. And back then ING, it was a bank. So I stupidly enough thought that was related to the bank, but it wasn't. It was a insurance company, right? And I invested in ING, bought 100 shares back then, and then shortly after the financial crisis hit, and the stock tanked quite a bit. But I didn't sell, right? Because I calculated, I thought if I sold the stock, I would have taken probably 20, 30, or even more loss. I can't remember exactly. But back then, my cost on yield, and we could go into whether that's a good parameter to keep track or not. But back then, I was focused on cost on yield. My cost on yield was about 3%. And when financial crisis hit, the stock share price dropped, but the stock was still paying dividends. So I thought, hey, if I sold it then, I would have taken, 30, 40, 50% loss. And even if I put the money into GIC, and because the central bank and Bank of Canada cut interest rate during financial crisis, I would have gotten like 1% or even less on GICs, right? So I just thought, hey, I don't need the money. Why not just keep it, collect dividends, and off I go, right? So, and over time, I think ING changed its name to Intact Financial at some point, and then we like I kept the 100 shares and haven't sold it, been collecting dividends since, and that the stock has done tremendously well, right? So that's kind of my first step to getting into dividend investing, even though I didn't know too much about dividends. And the way I saw it was by collecting dividends, if the stock price is down, I could just wait and see, right? I'm not forced to sell it because I'm still collecting some return. And then that was fine and dandy. But if you think about it, I was investing 100 shares in ING, and then the second stock I purchased, which was Manulife. Again, that was before financial crisis. So you can see two stocks in the Canadian insurance space. So they got hit pretty hard during the financial crisis, right? And when we started investing more focused on dividend investing in 2011, we were buying a lot of individual dividend stocks. And some did really well, some got hit, and we were focused too much on yield and such. But over time, when I looked at our portfolio, there were a lot of concentration in different sectors, right? Like the financials, for example, right? Or energy and oil. And when I looked at outside of Canada, I wanted to diversify outside of Canada. There's very little ways to do that, right? Like, sure, you could buy US dividend stocks, but there's so many, it's hard to own them all, right? So that's where we started looking into index ETFs like the X Canada Index ETF. And recently we got into the NASDAQ 100, like QQQ. And kind of taking like you said, a bit hybrid approach where we're collecting dividends, but we're also looking for that growth in our dividend investing portfolio, not just dividend, and really looking at more of a holistic approach. So we're not just looking for cash flow in terms of dividends, but total return, right? So that's kind of the approach.
Right. Yeah, and for me now, what happened with me is at some point I really started to think about retiring early and sort of what were the best ways to accomplish that. And as I did my research and I read and everything, what I discovered that for me, the most attractive way, the way that appealed to me the most was having a portfolio of dividend paying securities that would eventually grow to the point where they threw off enough dividend income to cover my expenses and then cover my expenses and then some and so on as they grew and as I added more money to it. And because I thought of that and because that was the plan, is I decided to get really rigid in terms of what I would buy. And my portfolio now, it's 100% dividend paying securities. Now, that includes REITs and that includes a few sort of these hybrid securities that don't necessarily pay dividends, they pay distributions, which is a little bit complicated. But the point is that the tax treatment's a little bit different. But for me, I work backwards from my goal. And because of that, it's like I'm not super interested in something that doesn't pay a dividend. I do have a few stocks that pay very low dividends and offer a lot of growth. And I thought that way was a way that I could sort of have my cake to get both growth and value, or sorry, growth and yield in the portfolio, but not necessarily compromise on my goals. So there's different ways to go about it, is basically what I'm saying.
Yeah, that makes a lot of sense, right? I mean, ultimately, there's different ways to invest in, and it's really you need to look at your goals, like what you're trying to achieve, right? So for you, you're focusing on the income side. For us, we're a little bit like that too, right? So the plan is to live off dividends at least for the first few years, when we retire early, right? And the idea is just
Hmm.
to give us a little bit more margin of safety, right? By not touching our principal, that allows us to be a little bit on the safer side. Now, whether that works in the long term, we'll have to see because we're not quite there in terms of living off dividends yet. But conceptually, that seems to work, seems to make sense. And we do eventually plan to tap into our principal later on. But yeah, for the first few years, the plan was to not touch the principal. And that's where dividend investing is quite enticing.
Hmm. Yeah, I agree. You talked about you sort of, the first part of your journey, you had some mutual funds in there. You're just sort of kind of figuring out what you were trying to do in terms of investing. Was there any moment in your life where you were kind of like, hey, I need to start investing. I need to, really take this seriously. I know a lot of people, when you talk to them, it's like, so how did you start investing? Like, what was the thought process there? And for a lot of people, there's sort of this one moment where it's like, man, I realized something had to change, whether it was they were paying an advisor too much or something like that. Was there anything for you that was that one event that sort of kind of gave you a kick in the pants to get going?
Well, not exactly. I mean, well, I think my situation is a little bit unique, right? Where my dad was an early retiree. He retired in his early 40s, right? And then I
Oh,
have a
wow.
cousin, he also retired in his early 40s, right? So I kind of have like mentors along the way, right? And then how we grew up in being Asian and all, maybe that's a cultural thing. It's always like, hey, you always save some money for the rainy day, right? Like you don't spend all your
Hmm.
money. So the whole live below your means idea was drilled into my head pretty early on. So like when I started working, when I got out of school, university and started working, I was saving quite a bit of money. And, unfortunately I was more focusing on like the safer investments, right? Like GICs and, you know, mutual funds. I didn't know any better. And my dad, even though he's retired, the way he approached things is like, oh, I need to learn my own on my own and make my own mistakes. He didn't like to just tell me what to do, which I appreciate that.
Hmm.
So I kind of try a few different things, right? You mentioned about how I was doing kind of day trading, well, not really day trading, but like technical analysis and, machine charts and, all that technical analysis stuff, right? But we really didn't get into like, and then going back a little bit, like that was on my own. And then I met my wife or then girlfriend, and we started reading some personal finance books, right? So a friend of his gave her a book called Secret Millionaire Mind. And that's when we really got interested in terms of, hey, how can we do better than just investing in GIC and, mutual funds? And that's when we started doing research and learn more about investing. And that's kind of the kick in the rear end to get us started. But yeah, I guess that was around 2011, right? So, but before that, obviously, I was doing various things, but really no single strategy, I would say. So I was all over the place. What about you?
Well, there's a couple stories that I'll tell. And the first one is the one moment where I realized that I needed to be better with money. And fortunately for me, I learned this at a very young age. So I was 14 years old and I got my very first job at the local Dairy Queen. And this was in the summer. I don't remember what year it was, somewhere in the mid 90s. And I worked all summer, busted my ass, made so many blizzards, got yelled at so many times because I was 14 years old. I wasn't a very good employee. Like, I'm not kidding myself here. And I worked all summer and I go next door to buy me and this girl that I liked to buy us drinks. By the way, the girl that I liked never did like me back. So it was kind of a failed endeavor on my part, but that's okay because the lesson I learned here. So I went and I bought us drinks and I didn't have enough money on my debit card. And I remember thinking at the time, I was like, this has to be a mistake. So fortunately I had enough cash that I was able to buy the drinks, but that Like that was it. I had no money. And I looked at my bank account the very next day and I had like $1 in my bank account. And I said to myself, where did all the money go that I made all summer long? And the answer was that I frittered it away on nonsense. I bought food, I bought clothes, I bought new video games, whatever it was. And it was all gone after the summer was over. And that was the moment where I said, I never want that to happen again, that I can't afford to sort of live my life and just have a little treat. So something needs to change. And from that moment on, I sort of became a saver. I really just kind of, no matter how much money I made, I didn't spend nearly all of it. I always had a healthy savings rate throughout high school. I had a healthy savings rate. And then when I finished high school, when my dad invested in real estate, just like you. My dad was a bit of an influence on me, but the difference with us is that my dad said to me, I was 16, 17 years old, and he taught me how he invested in real estate. So I'm 18 and I graduate from high school, and this house comes on the market. And my dad pulls me aside and he says, listen, if you don't buy this house, I'll buy it. So you should buy it. And I said, okay. Like that was all I needed. Like it was my dad telling me what to do. So I did it. But he taught me throughout the whole process, this is what you look for. This is what this house will rent for. These are the expenses. This is how much you'll pay in taxes and so on and so on. So he walked me through the whole thing. He really taught me what to do. And that was such a great gift for me because that just opened my eyes to investing and just seeing that, hey, there's this asset that I own that spins off passive income every month. And that was, I think for me, looking back on it, I was like almost 25 years ago now. And looking back on it, that was very important to me in terms of my investing journey and starting out and everything. Now, obviously, I've expanded from real estate at this point. Like I don't even own that house anymore, but it was very important for me to see that money coming in and get that positive reinforcement every month. And that's likely why I like dividends so much today.
That's a great story. Yeah, I think the idea of having cash flow and understanding, money coming in and money going out, right? I think the biggest thing, going to the basic is about, I talk about like living below your means where, you're spending less than you earn, right? And then the next step is really how do you grow that gap, right? How do you increase your savings rate such that you have more money to invest in appreciating assets, right? And appreciation assets could be many things. Right? It could be real estate, could be stocks, could be businesses. Basically something that when you invest, the value of that investment grows over time, and that's the key, right? Because what you don't want to do is have $10 and then that $10 just sits there and not grow. And with inflation, that the $10 decreases in purchasing power, right? So you can't buy as much over time. So you really want to make sure your money can grow in value over time, so you could buy more stuff, right?
Yeah, I think the other thing too is you have to take care of your personal finances before you really learn about investing and can really invest effectively. Because at the end of the day, if you have a 3% savings rate and you're putting $200 a month into investments, like that's a great start. And I don't want to disparage anyone who's listening who might be only investing that much, but there comes a point when you're just saving so little that no matter how good your investment results are, you can be making 15-20% a year. You can be beating the market by a lot, and it doesn't matter because you don't have any capital really coming in. You don't really have any capital risk. So I think that part is really important in terms of getting your personal finances right first and getting your savings rate high. And then from there, you can maybe afford to make a few mistakes because everyone's going to make a mistake. I don't know anybody who, even Warren Buffett, didn't immediately like kill it. His first investment, very famously, he only broke even on it because it wasn't a very good investment. He just sort of didn't know what he was doing. So I think it's very important to people know that you got to keep your personal finances under control before you can really invest successfully.
Yeah, that's a very good point, and that's probably we could probably go into really deep on a separate episode. But what do you mean by keep your personal finance under control? Like, do you have any sort of high level points that you could share?
For me, it wasn't necessarily pay yourself first. That's the common advice. It's a Wealthy Barber advice. I'm sure everyone listening has read The Wealthy Barber at some point. That was always that advice. But for me, I didn't really do that. What I did is I focused on the three main expenses that we all have, which is housing, which is transportation, and food. And for me, if I was able to get those below the average person, then that would just free up a lot of money for me to invest over time. And so what I did is I made sure that I kept those expenses low. I lived at home as long as it was tolerable for both me and my parents. I didn't have a car until I turned, I think I was 23 before I had a car. I walked everywhere. And I lived in a small town growing up. And so that wasn't the end of the world to walk everywhere. Like my first job at Dairy Queen was a 10-minute walk away from my house. And back then you would let your 14-year-old stay out that night because that's what parents did back then. So it wasn't a big deal there. And, food, I ate, lots of cheap pasta and so on in those years, just doing whatever I could to keep my costs down in order to really expand my savings rate. And you said you had a high savings rate when you first got out of university. Like, was there anything special you did?
Yeah, I mean, just before going to that, right? I remember when I was in university, I lived in Germany for 8 months. So I was a co-op student over there, and I think I was earning 800 euros per month, and then rent was like 300, 400 euro a month. So, right off the bat, I was like 40, 50% of my monthly earning. And yeah, I was eating super cheap and as a way to travel over Europe, right? That was my way of, trying to keep high savings rate so I could see Europe. Right? I slept and like I did a lot of cheap travel. I slept in the airport, slept in the train station, slept at bus stations and etc. So I wouldn't do that today, but back then that was what I needed to do. But going back to your question, coming out of university, I got a job, a full-time job. I work in high tech, right? So that was good money coming out of university. And initially, I was thinking moving out of the house because I was living on campus and at UBC throughout my university years. And when I first got the full-time job, I thought, hey, I'll just live in Vancouver and have my own early 20 lifestyle kind of thing. And my parents were like, you could move back home and that way you don't have to pay rent, you don't really have to pay for food. You could save all your money and stay with us for like a year or so to boost up your savings rate and save some money, then you could move out. Right? Back then it was a struggle. I'll tell you that. Like you can imagine in your early 20s, you kind of want to just get away from your parents, right? But somehow my parents convinced me to live at their place for, I think I lived there for like a year and a half. Looking back, that was one of the best decisions I made because I was saving, 70, 80% of my paycheck every month. And although I didn't really invest in like dividend stocks or index ETFs, I was investing in mutual funds, GICs, but still I was able to save a lot of money and have that money grow a little bit lower pace because the high MER. but that set me up pretty well early on, right? So that was step one in terms of having very high savings rate. And I mean, one thing the personal finance app community talked about having high savings rate, and there's unfortunately there's a bit of a negativity to that in terms of, hey, you have to be super super frugal. I was certainly there, like, cutting every single expense, try to eat cheap. I remember going to Costco, get free food regularly, right? And things like that. I have a post on my blog where I wash clothes. I was living with a roommate or flatmate, and after washing clothes, I would hang them dry instead of using dryer to save a few dollars. And even in winter, right? So I would open my windows and dry clothes, and it was super cold in my room. But that's what I did, right? Trying to save money here and there. But I think looking back, while that was good, I think you need to watch out about ultra frugality, right? Because there's only so much you could cut with your expenses, right? If you cut so much, you're going to deprive yourself. You're not going to enjoy life. You're going to have a bad lifestyle, right? And you know, in your 20s or 30, like, doesn't matter how old you. Sometimes you want to, go out with your friends, or eat out, or have a little bit nice things, right? Ultra frugality doesn't allow you to do that, and you're going to really regret that, because there are experiences that you're not going to be able to ever have it again if you turn it down, right? Like, going travel with your buddies in your 20s, that's going to be very different than going traveling with your buddies when you're in your 50s with kids around, right? So, you really need to value what makes sense. What I'm trying to get to is, yeah, cutting expenses is great, but I think the key thing is, how do you increase your income, right? How do you earn more money, either through negotiating with your employer, a side hustle, or even a second job, etc. Right? There are many different ways. And I remember when I was working in my 20s, I actually went to my boss, and this was when I just got married, and we have a kid coming. I went to my boss. I was like, well, I got a kid coming. I'm doing a really great job. I'm, managing these projects. I was a project manager, and I was managing one of the top customers at the time of the company. And I was like, well, I'm doing really well in terms of job function, but my pay compared to the industry average, and I did my research right through the internet. And I say, yeah, here's my pay. Here's the average. I'm way below the industry average. I'm looking elsewhere. So let me know what you can do. And sure enough, they bumped me up my salary quite significantly. And that's where I learned. That was one of the lessons I learned, is like, you need to just suck it up and ask for a pay raise from time to time. Obviously, not every year, but if you bring results to the company, to your employer, there's ways to ask for a raise. And that's probably more important than cutting your expenses. Because again, you can only cut so much, right? So increasing your income is way more effective to increase your savings rate.
Yeah, I definitely agree with that. And two, I was extremely frugal in my 20s. Like I talked about sort of some of the sacrifices that I made. And what I found was that I was only able to keep that up for, like, I kept it up for probably about 10 years. And then kind of after that, it's sort of, you really start thinking to yourself, like, kind of, what am I doing this for? What's this, what's all this sacrifice for if I don't get to live life and see those results at some point in the future? So I definitely agree that, if you want to maintain a large savings rate over time, there definitely needs to be a increase in your income aspect to it. And whether that's, you went in and asked for a raise, other people will just job hop, and they'll just, hey, it's been 2 years. I, haven't gotten a raise in a year. You usually get that kind of raise after that first year. And then maybe after that, you might not get another one. So at that point, you really have to look up yourself and say, hey, it's time for me to go take on maybe more responsibility somewhere new. There's a million things you can do. Did you have a side hustle? Like, I know the blog has been a side hustle for you, but even back then, were you working on a side hustle? Were you thinking about a side hustle?
Well, I was doing photography for a little bit, right? So I got into wedding photography, so that was my side hustle. But man, that was high stressful, very, very time consuming, right? Shooting wedding for 8 hours on the weekend, and you're editing photos for, I don't know, probably like 16, 24 hours with hundreds of photos, and, making sure that you could deliver nice set of photo to the wedding party. That was good. I mean, the money was good, but it was highly stressful. Yeah, and I think one thing that's really good lately in the personal finance community or the financial independence, retire early community is more and more people are talking about finding this balance between high savings rate and spending money, right? Say 10, 15 years ago, the fire community was all about ultra frugality, but now it's more what makes sense, what's the right balance. And the balance isn't the same for everybody, right? What's right for you may not be right for me, and vice versa. So I think it's good that we're talking more and more about it. Right.
Yeah, for sure. I remember Mr. Money Mustache. He was incredibly frugal, and it seems to have evolved sort of from there. The other thing too, I'll say about a side hustle. What I always liked about a side hustle, and I had, whether I have my blog back in the day. I had a personal finance blog that shall remain unnamed, but some of you listening will probably remember it. And now I have the newsletter, which is basically like a side hustle for me now. For me, it was always, if I worked all day at one thing and then I came home and I worked on my side hustle, as long as I picked a side hustle that I legitimately enjoyed, then it almost didn't feel like work. And so you talked about your, photography business and how weddings can be stressful. And I can't imagine having to deal with brides on their wedding day. I think that would be the worst thing in the world. So now you've got the blog as a side hustle. Do you find that it's kind of less stressful and it's almost like a fun little creative outlet for you to do that, and also you happen to make money at it at the same time?
Yeah, I'm not going to say photography wasn't fun. I was also doing portraits, and portraits they were more creative, and those were quite fun, right? Getting paid to shoot, headshots or even like models. Those were fun. Just wedding, it's kind of like once in a lifetime event, right? So it's a little bit stressful, but eventually I got used to it. But there's just like you need to make sure you get the shots, right? Like there's some key shots you can't miss, or else you're not going to have very happy clients, right? But over time that was fine. Like it was stressful, but I think I dealt pretty well with it, just because my full-time job was pretty stressful, so I'm kind of getting used to it now. But yeah, the blog is started off as just a kind of a hobby, right? I was reading a bunch of other blogs, including yours, and I was like, hey, I could probably share my journey, my knowledge along the way. And he started off, didn't make any money for a while, or pennies, and I just wanted to write and share my story, and people seem to enjoy reading. And now I was making a little bit of money, not crazy, but it at least is cash positive, and you know, writing is becoming a hobby of mine where I get to express my thoughts creatively, right, and connect with other people. So yeah, it's a hobby, but it's making money, so that's kind of nice. I'm sure that's the same as you, Nelson.
Yeah, exactly what I was going to say is that the newsletter for me is a hobby. For me, I'm researching stocks anyway. So I find that when I write my thesis down, when I write kind of what I like about a stock and what I don't like about a stock, it really helps cement that research in my mind. So for me, it's almost a selfish endeavor that I get to kind of put my thoughts on paper, which really helps my decision making process. Now, in terms of a income from the newsletter and from my blog back in the day, I'll say that anyone who thinks that blogging is a endeavor that will make you a whole bunch of money is sadly mistaken. I think a part-time sort of income is for most people the kind of as high as they'll ever go. And I mean, most blogs, like let's face it, like they just die. There's four posts up, and the guy just loses interest, and then it just withers away. And that's too bad because I think that consistency is the key to success there in terms of anything, but especially in blogging, where people can sort of see that, hey, this guy's consistent, he's there every week. Okay, like there's he's got skin in the game now, I can read it. So I think that that's super important. But in terms of a money wise, it's a side hustle, and some people make a lot of money at it, and good for them. But it's kind of like the hierarchy of a company where there might be 5,000 people in the company and 50 of them make a whole bunch of money, and then the other 4,950 do pretty well, but not even close to as well as the top people. And I think that's kind of the hierarchy in blogging, newsletters, because they're basically the same thing now. There's just sort of the next generation of blogging as newsletters, I think. So that's kind of we do it for the love of it, right? We're not doing it because we're making all this money. At least I'm sure not. If anyone wants to, Venmo me some money because they like me, I'd appreciate that.
Yeah, I think if you look at the hourly rates, it's not all that high, right? Like you're spending so much time researching the different topic ideas and writing, right? Like I would say a blog post for me probably takes at least 2 hours to write. That's probably the short ones that I write. But like if there's a post that requires a lot of research and such, that would take much longer. And then especially once you get into the numbers and such, right? And then there's a lot of back end stuff when it comes to writing a blog, and again consistency, right? I've been blogging for 11 years now, and yeah, there's so many different blogs I have, you know, started and disappeared. It's really too bad because people lose interest, or people start thinking they could make tons of money and then realize that's actually not possible, and they lose interest pretty quickly, right? So consistency is definitely a key, and for me now it's about connecting with other people, right? Like I've been able to meet many bloggers over the years and also readers over the years, and that kind of kept me motivated to continue writing.
Yeah, me too. I've met a number of people over the years. In fact, what I've done is when I've traveled to a new city, and this usually just works inside of Canada. When I go outside of Canada, I don't really have that many readers, and like say Iceland, where I was last summer. In fact, I have no readers in Iceland, which is not really very surprising considering my site's called Canadian Dividend Investing. But I'll go to Toronto or I'll go to Winnipeg, and I'll just send out a post on Twitter, and I'll just say, "Hey, Toronto, I'm inside your city. Who wants to meet up for a drink or a meal or whatever?" And I've gotten to the point where I have to turn people down because there's just so many people who have read my stuff and they feel like they really know me when they do read my stuff. And so we'll go and we'll hang out, and it's just like meeting an old friend because you just immediately have stuff to talk about, and that you have so much stuff in common that you can just immediately start talking, talking stocks, talking personal finance, talking whatever. And it's amazing how kind of open these conversations are and how people will tell you some of their kind of really important financial information to some stranger that they know off the internet. The trust that you can build up when you do this properly is amazing.
Yeah, I have the same stories, right? I met, like I said, I met quite a few number of bloggers and also readers, both in Canada and internationally. Like I travel internationally for work. So if I know somebody who happened to be, somewhere, I kind of hit them up and then, you know, try to meet up, right? So I met, I don't know if you know them, but Jeremy at Go Curry Cracker a while ago.
Oh yeah.
Yeah, we were both traveling in Japan, and I was like, hey, do you want to meet up? And we met up, and then they were living in Taiwan back then. One year I went there and, you know, had a meal together, and then they're like, oh, do you want to come to our house? We hung out at their place and chatted. So that was pretty cool. And even earlier this summer, this is a pretty cool story, right? I had a reader from UK started contacting me probably 7 or 8 years ago out of blue and was like, oh, you need to really, proofread your writing. Let's put it that way. And I was like, oh, okay, thank you. And he was giving me tips on how to edit my posts a little bit better. And that was the first email he sent me. And then over time, we started emailing back and forth. And then it evolved into he would send me an email kind of end of the year, kind of like end of the year update. This is what he did this year. And he really liked these posts I wrote throughout the years. And then we would go back and forth a little bit. And that happened every single year. And this year, earlier this summer, he came to Canada, visited Canada. He made it all the way. He took the train from Toronto to Vancouver. And when he first told me, I was like, man, nobody takes the train in Canada. What are you doing? And he trained all the way to Vancouver, and we met up for dinner and chatted for I don't know 3 or 4 hours. That was super cool, right? And again, you really connect with the people because you know them over time. They read your stories and posts, and yeah, it's pretty neat.
Yeah, that's fantastic. I love those stories. And, for the people who read either Bob or I, we'd love for you to email, contact us, like if we've inspired you or you just kind of want someone to talk to about this stuff. Because for a lot of people, there's not those people in their lives that they can talk to about this. So let me pivot here a little bit and
Mhm.
ask you, as you've gotten older, do you find that the desire for early retirement, whatever you want to call it, this next stage of your life where you're going to live on dividend income, do you find that itch sort of gets worse over time and as you work and everything, or do you find that as you get older, you're sort of just you enjoy having the portfolio as kind of like a backup plan? Like, where's your head at in terms of like, does work get harder sort of the more your portfolio grows?
Yeah, that's a very, very good question. I guess you're on the other side of this, Nelson, now. But for me, I mentioned earlier I work in high tech, and it's high stress. It's easy to do 60-hour weeks, and I deal with global people globally, right? So my working hours are kind of sometimes crazy, right? Like having meetings at 6 a.m. and we're meeting at 6 p.m. or 7 p.m. or later, a little bit over the place. And you probably have heard, even in the US, high tech company like Facebook, Google, Amazon, they've gone through lots of cuts, right? Layoffs, sometimes 10, 15% of the workforce. And working in high tech in this company that I'm currently working at, I've definitely seen rounds of layoffs in the past, right? Where, all of a sudden you just like don't hear from somebody. And so that and I felt I was pretty close on the cut a few times, but I think I got lucky over time. But I think the desire to retire early is still definitely there. But I think for me now is knowing that our portfolio is pretty sizable and we're generating, I think this year we're looking at $64,000 in dividend income by the end of the year. It almost gave me a bit of freedom, right? It's like, well, if I get let go, fine. I'm not stressed out about finding a job right away because I know I have this financial backing. At the same time, I'm also like, well, I really don't have to worry about being too stressful at work because I know if I don't like it, I could just quit at some point and we'll be totally fine, right? So it's interesting dynamics, I have to say.
Yeah, I think that's the best part about having a dividend portfolio is that it creates this sort of optionality where it gets to a point that you can say, hey, I know that I have 75% of my expenses covered, 80%, 100%, whatever the number is. And you can say, okay, that's going to cover this and this and this and this and this. And so you can really sort of do some mental accounting and you can say,
Mhm.
hey, my dividends match, say, my mortgage payment, or they match 80% of what I'm going to spend. So therefore, if I quit, all I have to do is hit that 20% or whatever that number is. And it just sort of creates this option that you can say, hey, I don't like this job. It's a stressful job. I'm out. And that's exactly what I did. I left my traditional employment in 2022. I called myself retired for a while, and I've kind of stepped back from that a little bit because I don't think that I'm retired anymore with the newsletter. I prefer to call myself selfishly employed. And the selfish employment factor of it is that I'm working on something that I enjoy, and it really doesn't matter what it pays me because the portfolio covers all of my expenses at this point. And the money that I make from my passion project, from my selfish employment, is just gravy on top of that. Because I think that when I think we're both the same age. I'm in my early 40s. I think you're pretty close. But you know, when you're that age and it comes time to, sort of make a decision of whether it's time to retire or whether it's time to sort of step away from work, you can do some more flexible things that maybe might be interesting, that might give you time to, you work a little and you travel a little or whatever your passion is. Have you ever thought about doing something like that instead of like kind of fully retiring? Is just sort of stepping back a little bit. You say you're in tech, you can do contract work. Is that something that's ever crossed your mind?
Yeah, I think that's definitely something I'm thinking a lot, right? And like my boss and his boss both know about the blog, actually. So it makes a very interesting dynamic, right? Because sometimes we will actually talk about investing kind of when we're just chit-chatting, which is interesting, right? I don't think most people would talk about money with their boss typically. And quite a few of my coworkers actually know about the blog. Like sometimes I walk around the company and walk in the office and people are like, oh, I read your blog kind of thing. I was like, oh, okay, who are you? So it's kind of interesting. Like I was out walking a few months ago just during lunchtime, and then somebody said, hey, you're Bob Lai. I was like, oh, who are you? He's like, oh, I read your blog. I was like, oh, okay, thank you. So it was good. But yeah, it's interesting in that sense, right? And talking about stepping back a little bit, I mean, I felt about, hey, would I be able to somehow negotiate something so I'm working part-time, or is that something viable in tech? Because with my job, working part-time would be, I don't know how that would work. Let's put it that way. But maybe contract work would work, right? Or some sort of part-time job at somewhere else where it's lower stress. I actually have a client that stepped back from high tech, and he went back to work a few times and then decided to completely quit. So been talking to him, kind of getting ideas from him, which is pretty neat because it's nice to have somebody to talk about and run some ideas with, right? But yeah, we thought about living somewhere else that's cheaper. As I mentioned, I blog under Taiwan.com, so Taiwanese Canadian. So we thought about moving to Taiwan, which has a way lower living cost than Vancouver in general. So that's an option. Or my wife's from Denmark, so we thought about, hey, can we go and live in Denmark. But Denmark is pretty expensive. I would say it's even more expensive than Vancouver if you're talking about Copenhagen. But outside of Copenhagen, probably a bit cheaper. But it's probably similar level as Canada. And we were talking about like, what about living Southeast Asia, etc. But then you really need to look into like the visa situation and tax situation gets a little bit complicated, right? And having traveled so much, Canada is pretty great. Even, I mean, it's not a perfect country, but it's pretty damn good, right? But yeah, I don't know. I'm just kind of evaluating different options, kind of talking to my wife and talking to people ahead of us about what they're doing and kind of taking that and in bit sizes and use those as a learning lesson. But yeah, we haven't really decided things, put it that way, right? But we'll kind of take it one step at a time. Let's put it that way.
Yeah, and no matter what you do, no matter what anyone does, your family has to be on board, and it has to be a joint decision, a mutual decision, because for a lot of people, like for you, I believe retiring in Asia is extremely feasible. Like you can go to Taiwan, you speak the language, you know the culture, where, me and my wife, if we were to go to Taiwan, there would be a much bigger struggle for us to do it because we just don't understand that world as well as you do. And I think that's going to be a struggle for a lot of Canadians who may think of kind of that is a solution to, because Canada, especially Vancouver, especially Toronto, and even places like, Montreal and, like the Hamilton, Niagara region, sort of these places that people would go before, that because they're quite reasonably cost, they're not really that reasonable anymore. And it's almost, to save money in Canada, you almost have to move to a small town or a smaller place. I mean, Alberta's still relatively cheap. Saskatchewan is as well, but that's a challenge for a lot of Canadians is those costs, and that's where the jobs are. That's a very difficult thing for a lot of Canadians. But at the same time, a lot of Canadians have figured that out and managed to keep their expenses relatively low, even if they do live in an expensive place.
Yeah, for sure. And I mean, there are different ways to do things, right? And that's why I think this podcast we're hoping to talk about, you know, how do we build wealth, like DIY wealth, right? That's the whole idea. And there's no one way to build wealth. And the idea is to demonstrate to listeners different ways and kind of help them to develop their own strategy and share strategies, right? So that's the idea behind this podcast, anyways.
Yeah, that's it. There's a million ways to go about it. And that's what I love about finance so much is there are so many different ways to be successful. There's so many different ways to get your savings rate higher, whether it's extreme frugality, which I agree with you, that's probably not the best way to do it, but it exists. And for a lot of people, that's a very easy thing to accomplish immediately. So there's extreme frugality, there's increasing your income, and then even on the investing side, there are all sorts of different ways to invest. Whether it's a dividend approach like you and I do, or like a hybrid approach, or buying cheap value stocks. I mean, there's a million different ways to do it. And as a student of the game, I love thinking about kind of all of them. But mostly I love that it's just such a optimistic feel that there's just so many things that you can do, you can be successful at it, and ultimately get to that goal, which is financial independence or a comfortable retirement or whatever your goal is.
Yeah, for sure. And that's why we're here to talk about the different ways of investing, you know, everything about personal finance, hopefully. And our plan to invite guests to come to this podcast eventually to talk about their own stories and what some of the lessons and mistakes they have learned over years, and just share stories and you know we'll see where this podcast takes us.
That's exactly it. If anyone is listening and they want to come on the podcast, send me or Bob a DM on Twitter, and we'll see what we can do on that part. We definitely want to have people on. We want to have DIY investors come on, share their journey, because ultimately that's what we're going to do on here. We're going to talk about what we've done right, what we've done wrong. We're going to talk about just sort of some of the things that we've learned, some of the mistakes we've made, and just kind of doing everything as best we can on our own without paying a bunch of professionals too much money to maybe give advice that isn't maybe worth the cost in terms of, the 1% of your portfolio or whatever gets charged to investors. I'm not even sure what it is anymore, because to be honest, I'm so far away from that world that I couldn't even tell you what it's like. So that's it, Bob. Any final thoughts before we go?
Yeah, I think just touch a little bit on the portfolio manager side of things, right? Like with so many different financial products out there, it's super easy nowadays to DIY and invest on your own. But I think there's still benefits in terms of using a professional, especially when it comes to like estate planning or tax planning, things like that, where you may not be able to get the right answer just simply by Google or finding via AI tools, right? So again, there are many different ways of doing things, and we're not saying, hey, this is the only way to invest, right? So we're hoping to demonstrate and show listeners all the different options, and you can make your own decision.
That's exactly it. There's no financial advice being shared here. We're just two guys who we think have been fairly successful at this, who want to talk about sort of what's made us successful and some of the mistakes we've made over the years. So, Bob, where can people find more info on you, read your blog? Maybe just give us that again.
Yeah, sure. I blog on tawcan.com. So that's TAWCAN.com. I'm on Instagram under the same handle. I'm on Twitter or X now, whatever it's called. Also the same handle. I haven't been as active on Twitter. Now there's so many bots on there. But if you add me or send me a DM, I would definitely answer you. But those are probably the best places to find me. What about you, Nelson?
Anyone can find me. I'm at CanadianDividendInvesting.com or on Twitter X, which is, Bob's right, is a cesspool of bots, but I'm still there because I'm hopelessly addicted. And that is CDI Newsletter, all one word. You can find me there on Twitter. We plan to release episodes every week with kind of periodic sort of breaks, sometimes for holidays and stuff like that. So I hope that you all join us on this project of ours. It's going to be a lot of fun. Thanks, Bob.
Yeah, thanks, Nelson.
If you enjoyed the show, make sure you subscribe to never miss another episode. For more from Bob, visit his site at tawcan.com. That's TAWCAN, all one word. Nelson can be found at CanadianDividendInvesting.com. They're both on Twitter as well. Just search for Tawcan or CDI Newsletter. Thanks. See you next time.